GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to our weekly webinar. Hope everyone had a good weekend. For those of you now experiencing some kind of stay-at-home order or lockdown, I hope it's okay. For those of you, especially in China, who are now coming out of such orders, congratulations, and I hope the weekend and the days are much more fruitful because of it. All that aside, there are some fantastic trading opportunities out there. The movements in last week, since last week's webinar, were even bigger than I could have expected. When I'm using some of these ideas about where price could potentially go as next areas of support and resistance, what I'm noticing is happening is that if I have my usual target of say 1 or 2 or 300 pips away, actually we'll get double that. We'll get 500 pips in the space of a week. So that brings with it extra risk, and certainly be mindful of your stop losses. They might need to be a little bit wider than normal, even if you're trading shorter time frames than I cover in this webinar. But you can certainly also widen out your profit targets as well, because the market is just moving much faster than it normally does. Now, I wanted to quickly cover with you an extra currency pair that I thought was of interest at the start of this webinar. That's the Euro-Swissy pair. This is the daily price chart. Let me zoom in a little bit, and you can see that we're in a pretty clear downtrend. Okay, so for the just looking at this daily chart here, you know, we really do want to be sellers, and you can see that actually we put in a low, we had a little rebound up to previous peaks, and we've rolled over again, and we've been hugging that 50-day moving average, and so previous support has become resistance, and we're expecting that probably 106 is resistance for the time being, and we turn to the downside. One thing to note, that one reason to suggest that might not be the case is you can see that there's some bullish divergence happening here. So while the price is making new lows, the RSI is making higher highs, higher lows. So momentum pushing higher while price lower, potentially the cause for a snapback. Now, why else could there be a snapback? Let's just jump over to these weekly trading charts, and if we zoom out just a little bit, you can see that this was when, if you remember, the Swiss franc was depegged from the euro, and it caused quite a few issues across Forex markets. I hope you weren't caught up to the negative side on that occasion. That was back in 2014, and the price just plummeted. And so that is obviously a strong marker point, and the prices have kind of rebounded since. Now we're pushing into those lows again. We're far from the flash crash lows in the Euro Swissy. We're actually below them in the pound Swissy, which is of interest. But you can see that this was previous support, this 106 area, and we're now below the 106. So if this support has given way, I think we're probably heading down to these previous lows of 103. If it hasn't given away, because we are oversold for a second time here, then actually this maybe is just still support. It's been a while since we've been here. There's a good chance it still is, and so from 106 I think we might have the possibility of a little pop back to these previous lows, and using sort of between 108 and 108.50 as a potential target to the top side. So let us close out the Swissy for now, and we'll get back to the major currency, commodities and indices that we normally like to look at. So this is our daily chart for the euro. It looks a little bit busier than I normally like to keep it. Just wanted to illustrate 2 points here. One is that you can see this was a resistance. We had a breakout to the top side, we failed, we rolled over, we made new lows. This is what I think is happening again this time. We had a big push to the top side, found resistance at the big 115 round number, but ultimately it was a failed breakout of any number of one of these levels across here. But you know, this one notably, you know, you could say it was the same For this, we had resistance through here, something along those lines, false break to the top side, and we rolled over to make a new low. And so I think the market is still weak. It's been trying to break to the top side and failing to do so. So I think from that basis, we're probably going to challenge these big 2014 Eurozone debt crisis lows down at 105. And if you remember below 105, this was Mario Draghi's whatever it takes comments down here below 105. So we're back into whatever it takes territory. It's just not that clear that Christine Lagarde, the new former IMF president and the new ECB governor, has the firepower to be able to back up those kinds of words. And if she doesn't, then the euro might be in a position to keep dropping. So if we get ourselves back to the current time, this is the big drop. That's the reason I wanted to point out this trend line on the chart. Not always a big user of trend lines, but this is quite a notable one. Through the lows of this big down move, the lows have been contained quite nicely, and you can see that if we do snap back above this trend line, which we're sort of trying to do at the moment, maybe that will be a positive sign. But for the moment, the fact that we're quite substantially below it, more than we have been on all these other previous occasions, to me speaks to a bearish scenario for the euro. But of course we don't want to sell it at the lows. I think maybe we can look for not even a move up to the 110s, but that is certainly a potential scenario. A push up to the 110s, but maybe just this previous low here up to the 109s would provide us a slightly better risk to reward, and then expecting that move down to that big 105 level. Watch 108. We've reversed from there once, twice. If I zoom in a bit, once, twice reversed. We're pushing up as we speak today, which to me would suggest either we fail again, and 108 is definitely the one in which we roll over to 105 from, or we get up to 109s or even the 110s for a bigger pullback before the rollover. Let's switch gears to the British pound. So this is our daily price chart, and as you can see here, we've got an area of support. We've dropped straight through that support, and it looks like based on this little spike up, maybe it's already held as resistance. What I'd be looking for is just hopefully a second retest into that area, which is basically the one, if I put a line through there, basically the 120 round number mark. So if we can get a rebound into 120 again, it provides us a decent risk to reward. You know, this trend very much is to the downside, so we are oversold. So clearly there might be a scope for a rebound, but you're just going counter trend if you're trying to do that. And here's our big picture scenario. We've taken out these two significant lows at 120. So we're looking at possibly pushing into new post-Brexit lows. That's potentially what's on offer here. And the crazy thing about that is that because the pound actually on a closing basis has already made fresh 35-year lows, we actually don't have the price chart data to look back and find those extra areas of support. So from that basis, what we need to do is really concentrate on the round numbers, which are always a key area of support anyway. So that's why we've got the 110s as our next target if 115 gives way. Now the Aussie dollar, certainly some signs of a rebound here. Nonetheless, the trend is still very much to the downside. What I've been looking at is just based on this recent really sharp leg lower, looking at some Fibonacci level, looking at just sort of basic retracement levels actually, and you'll notice that the 50% retracement level is the 161. So we've come up to the the 0.61. So 0.60 clearly the big round number that everyone's paying attention to that we dropped through in Aussie dollar. That's quite historic, having dropped through it. Now we went straight from 55 up through 60. I think we could actually, there's probably quite a few people with stop losses above 0.6, so I suspect the banks may try to run the prices up through 0.6, take out some of those stop losses in a big stop hunt, but before we get to 61 the price rolls over again. That is a potential scenario here, which goes in line with this downtrend in the Aussie. And just reminding ourselves of the of how far back we're looking here, and if I can just get it out to maybe that monthly. If I zoom in a bit, this is here you can see what we're potentially dealing with. So down to 55, but you can see that even in recent times, in 2000, that we did get down to these under sub 0.50s, down to 48.50 could be our ultimate target here on the Aussie. Switch gears to the Canadian dollar. Again, we had expected this pullback to the old resistance area. If you remember last week's webinar, this was the big breakout level that I'd highlighted, the 137.50. We got the breakout there, we got the pullback, and just in really unprecedented volatility we went straight up to the area of resistance that we had highlighted, which, if I zoom out a little bit to remind you, is this previous peak over here, just short of 147. So the breakout happened, we're already straight at 147. So the trend is higher on a shorter term basis, but we've run into some big long term resistance. So maybe that resistance can do a little more damage to the downside, cause a slightly bigger pullback, and ideally we could get a pullback into the maybe 40% area, and that would actually be a 40% pullback of this recent run up, would actually take us down to the 1.400 round number level. So that would make sense, where some longs might want to jump back into the market and retarget those previous highs without looking to be too greedy at new highs yet. 40 down to 46.50 would obviously be 650 points, which would be absolutely fine. Now, very much a sort of opposite chart, if you like, because of Canada's big oil exports. Brent very much to the downside. There have been some signs of stabilization in this 27 area. I'm reluctant to want to go. You can see in all my other charts, I've always been going with the trend, but nonetheless this is some quite key support here in Brent crude oil, down here at 27. So I am interested to see if this 27 level can hold while we're at such oversold levels on this weekly chart especially, and of course also on this daily where we've come into oversold, popped out, come into it again, third time, maybe third time's a charm, and 127 could actually work as a base, and even just as not 127, $27 per barrel could actually work as a base, and if it does, maybe we pop up to near the moving average, the 50-day moving average, and the key 40 level, which would, you know, on a kind of percentage return basis would absolutely be massive, and that's again the volatility associated with these lower numbers for a per barrel basis in oil these days. Quite crazy that we're down at $27 a barrel in oil. Okay, let's switch gears to our next commodity here, and it's gold. Now, no discernible trend here in gold, but what we're going to highlight is the big important levels. 1550 had been a pivotal price, and so we were using that as the basis, almost as our neckline, if you remember from last week's webinar. So a lot of volatility. We put in something akin to a double top, broke lower. We actually made it right down to the previous area of support. Then we actually got to the 1550 resistance as a neckline we'd highlighted. We went straight down to the support again, and now we're getting a decent rebound off that support. So it looks like some demand's coming in, which you know, in the week ahead videos that the team has produced, we have been highlighting how gold is still got a lot of big fundamental drivers behind it, and most notably at the moment just that all these central banks are determined to print as much money as possible, especially the Federal Reserve. It just announced a quantitative easing, a money printing program that is open-ended. So they are just going to print as much money as they want, as they see fit. So that really should debase the dollar, and even if it doesn't debase the dollar because it's a haven, it certainly should increase. It has a very good chance of increasing the demand for gold, and that's what we're starting to see here in the price action. Nonetheless, things are volatile, and so I think this resistance zone through here could potentially work as a this 1585 where we're coming into here could potentially work as a resistance after such a rebound, and because after such a sharp move lower there will be people looking to sell this market down. I think it could sell off again, but maybe not down to the lows, maybe not right down to 1450 again, maybe 15 holds. So if you're being a little bit conservative for 1585 down to 15, and then maybe even down to 1480, and then maybe that's when we're able to establish a bit more of a base again and look for some more upside. But it's not an uptrend at the moment, even though the big fundamental drivers from our perspective are bullish. The trend is very much a choppy sideways range, and so we're kind of trying to take these different support and resistance areas both to the top and the downside. Last but not least, the S&P 500, our representation for the US stock market. So if you remember in last week's webinar, we've been talking about the 20% bear market levels. We've since crashed through 30%, and if you remember what we were saying, did play out pretty well. Actually played out in the space of one day, where we were saying that the 20% pullback zone, if we were able to push above there, we'd get back to the 10% pullback zone, but if we fail to get back above, we're going to head straight back down to the 30 zone, and indeed we have. And we tried, if you can see here, that on a closing basis we kind of broke down, got a false break on a couple of days below the 30% level, and then as of last week we came right off the highs and sold down lower to this 2300 mark and below this 30%, and for me that's quite pivotal. We're getting a little bit of a rebound today. If we can get into that area, I think we probably sell off into the 40% pullback zone. But same rules apply. If we get back above 30 again on a closing basis, I think that bodes well for some sort of sideways bottoming potential formation to come in. But while we're below that 30 level, I'll be looking for us to push into the 40. And here's a reminder of that big term picture. Okay. Thank you very much for attending today's webinar. Good luck for trading this week, and I will see you at the same time next week.